How to buy them? How to buy them? CFD. CFD. There are many CFD providers. IG Market, City Index, or Philips Capital. Many. And what I use, personally, I use CMC, CFD, CMC. Okay. So when I think of how to buy or which platform should I use to buy gold and silver, I compare the expenses because I got no money. Small money I also want to save. So I compare, make sure I have minimum expenses for my investment. Okay, and holding fees. When you buy a commodity, typically they have holding fees. You can check the website. For gold, it's 0.6%. CMC. Silver is 1%. 1%. And also I look at the spread, because when you buy, you want to sell also. So you want, let's say you buy today and you sell today, right? What is the spread? This one you also must check, so that they don't charge you like a big spread. And when you buy and sell, you lost the capital gain for them. So I check based on the percentage. Gold is about 0.0171%, and silver is about 0.0779%. This is not fixed. Depend on market. Okay, sometimes the market is illiquid, nobody want to trade, the spread may be very high. Sometimes many volume, very high volume, the spread will be very low. Okay, so it's not fixed. Minimum investment also important for me. Like I told you, right, I no money, right? So I make sure that I don't want to spend more money on the expenses. So I make sure that I have minimum investment. I want to know the minimum investment. So for CMC, CFD, and I believe for other CFD, there is no minimum. You can buy even $1 of gold. $1 of gold. Okay. And because I buy it every month, so I use CMC market to buy. Yes.
Is there finance charge?
Good question. Finance charge. So this is holding fees. Holding fees. For CFD, typically they will not ask you to put 100% of your money to hold the contract. You can put 20%. You buy on margin, in other words. So you are leveraging, and you have to pay finance charge or call interest cost, whatever you want to call it. Okay. But for CMC, go a bit different. When I buy it, right? Of course, you buy $1,000 gold, you can just put $200. Then you are leveraging on $800. Then you pay interest based on the $800. But for CMC, I buy $1,000 gold, I put $1,000 cash. I just put in CMC. Then they don't charge me interest. Okay, I don't know about other CFD providers. You can check it out. Okay, so I buy 100%, I put 100%. Okay, that is for gold and silver. For oil, I'm also not sure because I don't invest in oil. When I invest, I will let you know. Okay, I will check for you, no problem. I believe Alex told me that there is an interest charge on oil, even you put 100% in the account. I'm not so sure, you can check with Alex. Okay? But for gold and silver, as long as I put 100%, there's no interest charge. Maybe they charge in holding fees. They just tell you holding fees. Okay? So second method is to gold and silver ETF, exchange traded fund. First two method is my recommended method. Gold and silver ETF. There are few ETF available in the world. Not only SGX. SGX, you can find this SPDR Gold Share. Holding fee is 0.4%. And today, Alvin told me that there is one iShare Gold Trust listed in US. Holding fee is 0.25%. Listed in US, so you have to use Booker and buy on US market. 0.25%. Silver, iShare Silver Trust, 0.5%. And spread, like I mentioned, is depend on the liquidity, the trading volume. So when I do the calculation, it's 0.077% for gold and about 1.5% for silver. Minimum investment, 10 lots for gold and 1 share for silver because it's in US market. But if you buy the gold ETF that listed in US, then you can buy with only 1 share. Okay, so this is a second method you can buy gold and silver. And third, physical gold and silver you own physically. Who sold to people? You own gold. I have gold. Right? So how to buy gold and silver? Physical gold and silver. There are many providers, like I mentioned. UOB is one of them, and bullionstar.com. Because I don't own physical gold, so how I know this provider? I just Google and they just give me this two on the top list. I think I show you this two. Sorry? Yeah, many gold. I don't know. But just to check that whether they are selling the really 100% gold or 99.99%. So this one you check it out yourself. But if you don't know, just buy from UOB and Bullionstar. I think it's quite safe. Alvin bought gold also, so he bought from UOB and Bullionstar. Spread premium. This is something interesting. Because you own physical gold, this must do something, make it nicer. You see, make it nicer so that you feel that wow, this is very something that you only. It's not like very plain, So this requires certain cost. They charge you as a premium. Okay. So let's say today price is $15, they may be selling at $17 because of these services. Okay. So also depend on dealer and depend on what size you buy. You will buy larger amount, then the premium is lower. Okay. But you buy like 1 ounce or 0.1 ounce, all these the premium will be very high, and also the spread will be very high. Okay. Minimum investment, this is what I found it from Bullionstar. Minimum 1 gram, about $70. But you buy this, your premium is 50%, and your spread is 32%. Okay. As of Monday, silver $25, 1 troy ounce. 1 troy ounce is almost equivalent to 1 ounce. $35. So same thing, if you want to buy this, your premium will be very high, 10% premium. Okay? So depend on you, if you want to buy physical, then you buy it. But to me, I focus more on expenses, so I don't buy physical gold. Gold and silver account. This one I found it from UOB. UOB. You can just open an account and the holding fee is 0.25%, and there's a minimum, so you don't just buy 1 ounce. After some time, your ounce all missing. just pay the holding fee, right? The spread is a spread. We will upload this slide, so you check it out, compare yourself. Minimum investment 5 gram for gold and 10 ounce for silver. Okay. And last one is future. Gold and silver future. I just showed this slide so that you know that there is a future contract, but I don't go into detail because future is more complicated. It's just like an option. You have an expiry date and volatility, time decay value, all this. So I don't recommend you to go for this unless you really understand the future market. Okay. So personally, I'm using the first method. Alvin using the third method. Or maybe he has some other methods, I don't know.